Scaling up Britain, why doesn't the UK have its own Apple or Google? Policy Exchange has taken a very real interest in issues of competition, the structure of the economy, and the industrial strategy. We've put on a conference earlier this year on the industrial strategy. We've hosted the Secretary of State for Bays on these issues. It's something we're very interested in, and we're delighted that we've put together an excellent panel. My name is Warwick, Lightfoot. I'm the Head of Economics and Social Policy at Policy Exchange. And if I quickly introduce our panel for us, they'll probably speak for 3, 4, 5 minutes to lay the story out. I'm going to ask Xavier Rolet from the London Stock Exchange to sort of set the framework for the discussion. And we all know what this issue is. Historically, we've been very good at scientific innovation, very good at starting companies, but we've not been quite so good at carrying them to their full potential when you look at other countries in the world. I suppose there is a question sometimes you might ask, well, do you need to be? I mean, for example, Australia and I think Denmark are very successful economies, don't do it in quite the same way. But nonetheless, I think it's an interesting question and a worthwhile question exploring. Do we have a problem with the structure of our capital markets? Is there something in the tax system? Why is it that we it's suggested that sometimes we haven't been able to do what the US can do with its Googles and so on? So if I just take us through our panel, I'm delighted that Liz Truss, who's a very good friend to Policy Exchange, and the Chief Secretary of the Treasury, has come to help us this afternoon. Thank you very much indeed. Francis Martin, the President of the British Chambers of Commerce from Northern Ireland, who's a very experienced practical businessman. And I also think a Northern Ireland perspective may be helpful here, because inevitably, over many years, there's been more direct experience of some of the things that maybe contemporary British governments are thinking about in relation to industrial strategy, and I think that would be helpful. He has got to go back to his day job at some point, so when he leaves us halfway through, it won't be because he's got fed up with us, he's actually got to do a transaction. Xavier, who is from the London stock market, has had a very long career in financial markets, Lehman Brothers, in Credit Suisse, First Boston, Goldman Sachs. So certainly all the market stuff is very much meat and drink to him. We're also very pleased to welcome Chris Hulatt from Octopus Investments. He likewise been a very good friend to us, helped us with all our industrial strategy stuff when we try to feel our way through what can an industrial strategy in practice amount to. You can have industrial strategies that amount to a lot and do a lot of damage. How do you actually have a sensible business strategy that makes markets work better for the whole of the country? It's been very helpful to have your support on that. And I'm also delighted to actually welcome Melissa Morris from Lantum, which is an example of a new startup. It's an interesting startup because it's a disruptive innovator of stopping you and I as taxpayers through the National Health Service being ripped off by locum doctors and the people who used to actually dish them up to health authorities, GP practices, and health trusts. So I think we've got a wide spread of perspectives, and I'm going to ask Xavier to lead us off, please.
Well, thank you very much. I'll keep it short. But the question is, why doesn't the UK have its own Apple and Google's? And for as much as we can see, and our businesses operate throughout the UK, up and down, it's not just financial services down in London. The UK does have its Apples and its Googles, except we've not heard of them yet. But there are 5.4 million small and mid-sized enterprises in the UK. Now, to give you a sense, since we are putting a framework to this, the whole of the European Union has 23 million SMEs. 5.4 million reside here. We have, for sure, the most global financial markets in the world, and in some respects, the biggest, the most liquid, not in all products, but across a range of products. So the question is why have we not heard yet of these Apples and Googles? And the technology revolution started actually in the United States for the Microsofts and the Apples and the Google, and it started in the mid-1980s. When, if you'll recall, the United States economy was a deeply underperforming economy. At the time, Japan was taking over the world. Now we're talking about China. It's a far larger economy. But something happened in the United States that turned a deeply underperforming economy into an advanced, technology-driven economy. And I would venture that, of course, there was a lot of good research being done in US universities, just like there is world-class research being done, in fact, right here in Manchester. Manchester University has 25 Nobel Prizes attached to that institution. Yesterday I visited the Graphene Institute. So there's absolutely no lack of that world-class research coming out of UK academic institutions, some of the best in the world. The US had some of that as well. Huge domestic market. But what changed, the focus on technology, was the focus that capital markets gave in the mid-'80s to growth. And it was changes in capital markets, particularly the shift towards an economy that had been funded through debt, towards an economy that became funded through long-term patient capital, namely equity, which, by the way, was invented here a little earlier. And so one of the positions, or one of the arguments I would like to posit for this discussion, since we have the science, and I think you'll hear from some of the panel participants here, we also have the entrepreneurs, 5.4 million of them, so the evidence is there. We have the entrepreneurial spirit. We have the science. We have the capital. There's, in fact, almost 900 billion pounds of unused capital sitting on the balance sheets of very large UK corporates today. If you look at the EU's, a couple thousand trillion. So there's no lack of capital. And we do not have lack of risk-loving investors. This is something I hear quite often. Yeah, but investors in the EU, in the UK, VCs, the venture capital industry last year raised $3 billion for the whole of the European Union, including the UK. Sorry, I know I don't want to offend any of you if I give you EU-based statistics, but these are the data that I have. The United States raised $53 billion of new venture capital money last year. So there's obviously a delta. But the point is, those investors, sometimes I hear, well, maybe they're a little more timid. They don't like to invest in those startups. Actually, that is not true either. For those of you who know the shape of the hedge fund, venture capital, private equity, and alternative asset management industry in the United States, you'll know that a very significant component of their underlying investors come from here. So there are UK pension funds, European family offices, that when they have capital earmarked for the scaling up, which is what we're talking about, the scaling up of these fast-growing minnows, they give it to US asset managers. So we have all the ingredients. What is it that we need? I'll let the panel participants talk about this. I'll perhaps modestly offer my own 2 bits at the end of this discussion. We have a great panel today, and I think you're going to hear from both governments, the private sector, as well as institutions that sit in between government and private sector. I think it hopefully will be evident to you that we have all the assets, and we could really turn those unknown companies today that have the potential, and that's the last point, that don't sell out once they get to, be worth 50 or 100 million, but can get to $1 billion, to 10 billion, to 100 billion. It's that level of ambition that we need to unleash. Thank you very much.
Well, thank you very much indeed, and I'd like to thank London Stock Exchange very much indeed for helping us put this event together and for sponsoring it. And I'm delighted that the Chief Secretary is going to help us a little bit more.
Well, thank you very much, Warwick. And I slightly take issue with the title of this talk, because it's rather self-flagellating. Why doesn't the UK have its own Apple or Google? We've actually been incredibly successful over the last 10 years at developing a startup culture in this country. We're now third in the world for the number of startups we have. That is punching above our economic weight. And we've also got a huge number of companies that have gone to the next level up, the so-called scale-ups. And I think we've got 22 unicorns, which are billion-dollar tech companies, operating in the UK out of 58 across Europe. So the next in the league table is Germany with 8. So we are doing a great job. And I was over in Japan and Korea recently talking to people who are already investing in the UK or interested in investing in the UK. And they talk about how creative the UK is, how fantastic it is to invest here, what an open economy we have, the entrepreneurial spirit, and also how easy it is to set up a company in the UK. So I think we should celebrate the progress we've already made. And these unicorns, these billion-dollar tech companies, they're not just based in Shoreditch and London. You've got boohoo.com, which is based in Burnley. You've got One Disco, which is based in Sheffield. Yesterday, I met a whole bunch of new Manchester businesses who are breaking into the market, getting new capital. Some still travel to the US, of course, to get funding. But we've got a global capital market we can access. And of course, I support things like the Patient Capital Review about how we get more money in from the UK. But we are a nation which has always been open to capital coming in from overseas. Recently we've seen SoftBank invest in Arm. I think that's a good thing, that we're open to that capital and that we have a strong sort of platform for our ideas. So I'd like you to be a bit more upbeat, Policy Exchange, I think, in terms of the way you position things. But the other thing that I object to in the title is the idea that we should be planning for how big businesses should be in Britain. I think the planned economy is surely something that John McDonnell should favour rather than Policy Exchange, which I've always thought is a free enterprise think tank. And we've got to think, what is Britain good at? Well, we're fantastic at ideas. Our higher education institutions are the best in the world. We have been part of a global ecosystem. And one of the reasons that our higher education is rated so highly is because we collaborate with other countries around the world. We don't just work in silos here in the UK. Our academics work with partners all around the world. We're open to overseas investment. And we're also very, very effective at moving companies onto the next stage now. What we're talking about, and I think Xavier covered this in his remarks, is a timing issue. Silicon Valley has been developing for a number of years. It started before the UK tech movement fully started. We now have a huge opportunity, I think, right around the country. I think the Oxford-Cambridge corridor is a really exciting opportunity as well. And it's reaching my constituency of down and market and so on, and we're seeing businesses interested in setting up there. I think what our challenges are about how we get to the next stage, Xavier's talked about capital, but I think capital's important, but probably more important is culture. It's how do we develop that full enterprise, full entrepreneurial culture? How do we make sure that people in Burnley, where this business is sited, feel like they're part of that rather than tech is something that happens elsewhere and something that's done to them? So we're not talking about robots taking our jobs. Instead, we're talking about how we can drive forward our ambitions, our desire to self-betterment. And I think that's the challenge we face, because quite often these companies and these startups are set up by some people, but we don't get everybody involved in them, and it's not necessarily something people think when they're at school or when they're at university or when they're doing an apprenticeship. That could be me. I could take that risk. Yes, I might fail, I might succeed, but that is an exciting opportunity. And I think it's about getting those businesses speaking out more about what they do. One of the themes for me at this conference has been, when I've spoken to business audiences, we need to hear more from businesses about what they do, what good they're doing, the impact they're having on society, and how people can be involved in that. And I think that's incredibly important. And part of it does have to be talking ourselves up, because I have to go to Japan and Korea to hear how great Britain is. I'd like to hear how great Britain is here in Britain from British companies and British industries talking about what they do. And I think we've got an incredibly exciting period ahead of us, when we've got a lot of businesses that have just been set up who can move into the next phase using capital from overseas, but also using capital here in the UK. And I'm certainly determined to talk it up, and I hope that we get business itself communicating about what they're doing. Thank you.
Well, that's an excellent reminder. Thank you very much indeed of actually the genuine success of the British economy over the last 30 years of being an open, internationally competitive, dynamic and market economy exposed to the full international division of labour. And that's why we have such successful businesses and such a successful long-term pace of economic activity and one of the best recoveries from the Great Recession in 2007, 2008. But I thought it might be useful to bring in Francis at this stage, because I think Northern Ireland does have a particular perspective on all these things.
Well, yes, we do, but perhaps before I speak specifically about Northern Ireland, I'd probably like also to reference in the way that the both previous speakers have done, just the opening question, why don't we have a Google or an Apple? I don't think that necessarily is the question. I think that we have to ask the question, does Britain have the potential to have an Apple or a Google? And of course we want those companies as well, but I think we have to recognise where the success of Britain has been over many, many years in terms of it's the level of entrepreneurial businesses that are the backbone of this economy have grown, the GDP, and continue to underpin the economy. And I think we want to make sure that we have the infrastructure and the support mechanisms in place at all levels, whether it's in finance, industrial strategy by government, or in any other way, to ensure that continues. So therefore, yes, we don't want to ignore the potential of finding an Apple or a Google, but I think our primary focus should in the first instance is to create the underpinning for the overall growth of the UK economy in a business world. And I might touch on some of the issues that I see coming through very much, not just in Northern Ireland and in my experience working with Northern Ireland business, but in terms of the feedback and our understanding of both the culture of British business, but also how British business is made up. We cannot ignore the fact that certainly the cases in Northern Ireland, and I guess it's similar in the rest of the UK, that up to 75% of businesses in the UK are made up of family businesses. So therefore, what we have then is a very different culture of thinking in terms of how those businesses are managed and grown. They are run often by the family, for the family and for the employees. And therefore, whilst that presents tremendous opportunity in terms of harnessing the passion that comes from the family and the opportunity to grow the business, sometimes it can, on the reverse side, be a prohibitor, because many businesses therefore see a level of growth as being acceptable to the family, and therefore that in turn inhibits the business growth and therefore the contribution to the economy. Likewise then, where you have family businesses dominated by family members, you often inhibit the growth of those family businesses simply by virtue that you don't bring in the skills to grow that. So therefore, I think we have to recognise some of the issues. Speaking from a Northern Ireland point of view, and again, not only have we had the challenges of running an economy, we've had all of the political challenges as well, which does nothing to help, I think, the ambition to grow and the confidence to grow. And we've seen that in Northern Ireland, for example, particularly where 1% of the businesses in Northern Ireland make up 99% of the exports from Northern Ireland. I think that says something about not just the ability to grow business outside Northern Ireland, but the confidence to grow business outside Northern Ireland. I don't believe that the factors are materially different from the factors that are there in the rest of the UK. I also agree with the point, the culture, the entrepreneurial culture. I sometimes think that can be lacking, and again, that might just emanate from the construct of the business community in terms of a lot of it being family. And back then to, I suppose, ambition and the ability to exploit that ambition into something much more tangible, going for growth. But I think if I would be fair to the Minister and fair to, I think, what the government has been achieving recently, I think you have put in place a construct in the industrial strategy that creates a good underpinning. I think what we have to do now is just build more and more ambition into that going forward, and it has to recognise not only the skills deficit, the funding deficit, which I might argue doesn't exist. I think the education around the funding availability is probably a big challenge that we've got to take forward, but also nurturing the entrepreneurialism that I believe is probably more latent than we would like it to be, and find the initiatives to support the growth of that as well.
Thank you very much indeed. Now, I think we should actually get the entrepreneur who's doing the business to actually gee us up a bit.
Okay, I'll try. No, so I was going to say, I wholeheartedly agree with Liz. I feel really supported by the ecosystem. I'm in Shoreditch, which is obviously the heart and soul of it all.
I wasn't meaning to slag off businesses in Shoreditch, by the way.
But yeah, so my company, Lantum, is a technology that basically eliminates all the manual and repetitive tasks involved with staffing in healthcare. My only client is the NHS, so a little bit different to some of the other startups that you see. We've raised £10 million in venture funding so far, and that's been a mix through angel seed rounds, and then later on we did some venture capital rounds as well. And yeah, I have to say, I feel like the ecosystem to get off the ground and get to where we are is top notch. I mean, you've got tax breaks for investors to come in and invest money, which really de-risks it for them. We've got some insanely clever people coming out of places like Cambridge. Very cutting edge, deep technology is being developed right next to us. And the likes of Google, Facebook, Amazon all have offices here, and that has a real reverse osmosis effect. So we've actually hired people from those companies and that's insane amounts of skill and talent that are actually coming from the US that are coming into our ecosystem. So I think to get to the sort of first £10 million of revenue, I don't think that's where we need to be focusing. I think the next part is how do we actually get the real scale-ups. But I don't think it is fair to say that we don't have them. I mean, if you look at companies like Betfair, Deliveroo, TransferWise, Just Eat, like these are companies that are British companies, and they make me really proud to be a British entrepreneur. And they are role models to us. And it just shows that actually, you know, even though we are small, we are mighty. But I think the most important thing is to look, if we're looking at the US and we're obsessing about our US cousins and why are we not able to create companies as large as theirs. And I mean, look, the list is endless. You could just go on and on talking about how many there are. But don't forget, the most important thing to scaling is having customers. And the US has 5 times the number of customers at their fingertips to us. We're a much smaller country. And essentially, if you can't scale in your home market, you know, as fast, you have to internationalize in order to get more customers. So, you know, in the UK, I think if you look at the really big success stories, a lot of them are in fintech, and that is because we have a really large financial services industry here. So actually companies can get to a certain scale by selling in their home market without having the complexity of internationalization. So I think I can probably, when I think about myself and the challenges for us to scale, there is one industry, one sector that's extremely large in the UK that isn't as entrepreneur friendly, that does protect incumbents, and that's our public sector. The public sector is my only client, and I have, as an entrepreneur, worked extremely hard to try and navigate through the procurement processes, which are extremely difficult to navigate. You know, it's taken us 5 years to get to where we've got to, but I feel like if my customers were, you know, consumers, I probably would have got a lot further than I have today. So I think, yeah, there's 2 things. One, which is the procurement and navigating that, and the second is long-term contracts. I can't tell you how many times I've gone to talk to a hospital about our product, only for them to say, oh, well, we're in a 3-year long-term contract with Capita or something like that. And actually, you know, that does protect these large bloated incumbents that actually offer, I think, a worse service for a higher cost. So the one thing I would say that can be done is to open up more customers to UK businesses, and that means making the public sector more open to startups and bringing much more competition to and challenging these incumbents. So in summary, basically, we've got the skills, we have the right ecosystem, we've definitely got the ambition, but I think it's now about really mobilizing and opening up to entrepreneurs.
No, that's very helpful indeed, and I'm sure that anyone who's been involved in the public sector, particularly from a local government's perspective, and I also think from the health perspective, some of the EU procurement directive requirements are very, very clumsy indeed, particularly for smaller businesses, and also because of the difficulty is it's intended to promote competition and to prevent hanky-panky, so to speak. But sometimes, when you actually want to squeeze more out of them and get a better price, you can't do that at the last minute because the rules prevent you. Chris, I know as an investor, you have given a lot of thought to this.
Yeah, and I absolutely echo a lot of what's already been said. So when I set up Octopus 17 years ago, that was seen as a really unusual thing to do. For a young person to set up a business, it was just not the norm, and the culture has totally changed. We have a very vibrant early stage environment now that as a country we should be really proud about. We should definitely be celebrating that as a big success story. At Octopus, one of the big things we do is invest into early stage companies, both unquoted and AIM listed. So we've got a lot of expertise in that. We've seen at first hand how hundreds of companies have faced those kind of challenges. And to us, I suppose, we've also experienced directly within our own business as a scale-up over the past 17 years. And it's easy to look at Apple and Google, and of course they are the standout success stories from a very, very deep US ecosystem that's been developed over many decades. And they've created a lot of value in the US, but to me where the real opportunity is to focus on that very deep base, that create that ecosystem and allow businesses to keep scaling. And if you do that, and only if you do that, then maybe one day an Apple or a Google will pop out. But in the meantime, you have really driven economic growth. One of the things that we track at Octopus is what we call high-growth small businesses. And they're businesses with turnover of 1 to 20 million pounds, kind of in the sweet spot that you talked about. They're growing at least 20% per annum. And there are 22,000 of these businesses around the UK. That is unlike what the situation was like 10 or 20 years ago. It's changed beyond all belief. And the key reason why we should be applauding that and focusing on those businesses is they're 1% of all companies, but they create a third of all new jobs. So it's absolutely right at the heart of driving economic growth. These are all around the country. They create 3 times as many jobs as the FTSE 100 businesses. Yet normally, I think most people would assume that government is very focused on the very large companies. Actually, we really need to focus on trying to keep driving this forward. So what are the 2 key things to growing a business? In our experience, it's always absolutely access to skills and access to finance, and you need both of those. I won't really say much about skills right now, but other than to note, one thing I think we should be very focused on is the way the ecosystem has developed. So in our portfolio of companies that we've backed, 40% of them in the UK have got a non-UK person as the founder or the CEO. So we've created an environment where people have chosen to come here to build their businesses, and we need to make sure that that sort of environment is sustained. We already have cities like Berlin and Paris tapping the CEOs of our portfolio companies on the shoulder, trying to get them to relocate their businesses, and we need to combat that. In terms of the finance landscape, I think we've had a really good ecosystem. We've got early stage businesses that are thriving, as the third in the OECD stat shows. But at scale-ups, we're, I think, 13th or something. We have a much worse performance there. And to keep creating the right environment at scale-ups is absolutely critical. We've got great government mechanisms like EIS and VCT that help early stage businesses develop. And I think it's absolutely right that the Patient Capital Review is looking at where there is a funding gap for businesses beyond that point. We see it ourselves in a business looking to raise, say, 5 to 10, 15 million pounds, that kind of range. 60% of businesses in the UK wanting to raise that kind of money have to take it from a US fund. And that they may be able to raise the money, but inevitably it takes longer, it's harder to do. The centre of gravity of the business probably starts to change. So I think that is something that we need to combat. We need more local funds. We've spent 15 years trying to build the capability so that we can back a business all the way from seed through to being able to do a 25, 30 million pound round. It's quite difficult to get that kind of funding escalator in the UK. I'd also like to touch briefly on AIM, which I think Xavier and his colleagues, and I think the country at large, should be really proud about. AIM is an absolute success story. A bit like Liz, I travel a fair bit. I've been in Korea 3 times this year. When I go to a place like Korea, people always say, the UK has got an amazing environment. AIM is a big success story. We should be talking that up a lot more and making people realise what it is all about. You know, we have seen AIM used very successfully by lots of companies to go from being worth 10, 20, 30, 40 million pounds to being worth hundreds of millions. You can raise the money. It is very patient capital. And I think there have been some good things that have happened to create that. So allowing AIM shares to be held in ISAs has really helped to catalyse that. If I may, I'll just give you a quick example of how I see the ecosystem working really well. So take a business that we backed a few years ago called Eve Mattresses. It sells mattresses online. It's trying to make it easier than going to kind of John Lewis on a Saturday afternoon. And it's growing really quickly. It was set up by someone who came over from Poland, who'd been in the ecosystem here, created the idea. And it's gone from an early stage business that we backed with our VCT money a couple of years ago. It floated on AIM earlier this year, raised £35 million, and it's growing really quickly. It's gone from being active in just the UK to now active in 15 countries. But it's got 73 staff and 15 nationalities represented. So business is very globalised, very multinational, very dynamic and quick moving. And if we can create the environment where We can have dozens or hundreds of businesses emerging like that. Eve may or may not become the next unicorn. Certainly isn't going to become the scale of Google. But creating hundreds of businesses like that is what definitely is powering economic growth, and I think we should be looking to create the conditions for that.
Well, thank you very much indeed. I think the panel sets us very lively and an important challenge. And I think there is this interesting question that I half touched on, and I think Liz in a way threw out a bit more. In the end, it should be the market that determines what scale of companies we actually have, and do they have to be big or not. I think it's time for some questions. If we could have crisp questions capable of eliciting an answer, that'd be a help. I'll take the gentleman at the front. And then the gentleman at the front there, and then the gentleman there. So nice 3 easy manoeuvres. Go ahead.
Thank you. Liz, you mentioned culture, and I just want to know whether we think government can actually do something about the culture. So I know one startup that couldn't get any back in the UK, so used Y Combinator in San Francisco. We've gone through 2 successful funding rounds, but they are now a US corp, so it's 3 Brits who are now working in the US. I know another UK company developing a really exciting technology in the middle of a funding round, but all the investors are thinking of exit strategies in 3 to 5 years. So really difficult to get that patient capital. And is it a cultural thing? And if it is, can the government actually do something about this?
Question there.
Melissa mentioned that the UK market is a little bit smaller than the US market. Isn't the obvious answer, therefore, for the United Kingdom to stay within the EEA single market at all costs?
Very good. And a question there.
Hi there. I represent an SME in the aerospace and defence business. We're actually exhibiting outside. First of all, we're on the London Stock Exchange Elite programme for companies that are going to AIM list. It is brilliant, and thank you, Xavier. It's a very, very good programme. Secondly, we've had 2 government grants totaling about £4.8 million, Innovate UK and Regional Growth Fund. They are brilliant and very good, very supportive. However, 2 things. I totally agree with Melissa. On both our UK government grants programmes, we said our number 1 customer is government, either UK or abroad. It is a pain in the ass doing procurement into government, particularly in the MOD, even more than the NHS. And secondly, there's no linkage from government giving taxpayers money to my company in terms of grant to then being a procurement customer. And that there's some gap there that I just wonder if you could solve.
Very good. Then what I'm going to suggest to the panel, run through, you chime in on the whole lot if you want to, or just one particular thing, whatever sort of takes your fancy. And I thought we might actually kick off with Xavier.
Okay, well, thank you very much. Thank you, by the way, check out his company. It's a great company. If you have a little bit of spare money for the next round, it's a fantastic, fantastic business. It's not all about software. You look at space and the airs. There was an important, I think, question that was raised by the Chief Secretary, is culture. And we've actually spent, over the last 6-7 years, a lot of time talking to companies in terms of how they thought of their expansion, their level of ambition. And we came to the conclusion, within the boundaries of what we do, that there was a strong link between the culture, namely the ambition of the entrepreneur. You know, did they think they could become, from a 10 million, a £1 billion company? Did they think there was room to become a 100 billion company? And of course, there's not going to be 1,000 of these companies. You know, Google and Apple, these are 300, 400, 500 billion dollar companies. But how did they determine the potential capacity and maximum development of their business? And we found that it was linked to their global aspirations. Small businesses today that have great business models, many of them. Now, some of them, as we've heard, have a single customer, could be perhaps the UK government, but is that scalable to other countries? The most ambitious companies that have scalable, disruptive innovation and technology have global ambitions. And they all came back to the point that as we had gone through these conversations, if they fund themselves primarily through debt, their focus is going to be debt reimbursement. Their focus is going to be protecting the assets that have been leaned or committed to the lender, whether it's bank or another one. And so their culture, their aspiration, their ambition was limited to that short-term risk management system. If you develop an export plan exporting to the US, to China, to wherever, Saudi Arabia, that's a 3 to 5 year project. By the time you find your importers, your customers, sell you can't fund a 3 to 5 year effort with short-term debt. It's just a mismatch. So we found a strong connection between the way entrepreneurs were thinking they needed to fund themselves and their natural level of aspiration, which is why, and thank you for the credit, thank you very much, we created a program called 1,000 Companies to Inspire Britain, seeking to give visibility to what we thought were the fastest growing, most innovative, best companies. And then its sister program, Elite, which is a capital raising, which is an accelerator training and capital raising program. That was our initiatives. Mm-hmm. But we do think there's a strong link between the availability of capital. Once you go, for example, to the Elite program, the first year, we look at your business plan, management plan, and then we introduce you to investors. If you don't understand the mentality of an equity investor, it's difficult to present to them in a way that it maximizes your chances of raising capital. And so that link between infrastructure training and access to investors beyond the traditional sort of bank lending is very, very important. This is an area where today the connection between fundraising, availability of capital is probably a bit more advanced in the US than it is here. And I think what you've heard, and which I would certainly subscribe to, and I think I try to get that sense in my earlier comments, is we have all the ingredients, we have the companies, we have the winners. We started a little bit later, but how we can now accelerate to ensure that these hundreds of thousands of entrepreneurs know and quickly are able to access not just the 10, 25 million. Thank you for your comment about AIM. The average company quoted on AIM is worth about 25 million pounds. But if you, for example, those of you who know the company called ASOS, which is a multi-billion pound company, when it first listed on AIM, it was worth 17 million. We need more of those. It could go from the 10 to the 20s to the hundreds to the billions to the tens of billions and so on. And for this, and I'm particularly happy and gratified that we have with us the presence of the Chief Secretary of the Treasury, we believe that one of the things that is important is a recalibration of not so much the regulatory, but more importantly, the fiscal treatment of equity, which is heavily taxed, versus debt, which is heavily subsidized.
Do you want to come in, or do you want to? Happy to come in?
Yes, I'm.
Yeah.
Well, I'm
across
the piece. So, on this issue of culture, I think there are different. So there is the culture of early exit, which, I'm interested in why that happens, and it could be a good thing. I mean, there's no reason why people shouldn't sell their business and move on to start up another business. So I don't think we should be immediately suspicious of that. But if there is a disincentive or the culture is such that people are encouraged to do that when actually there is the opportunity to have the global ambition, definitely we should look at that. But the other culture question I'm very interested in I've heard frequently that many of the startups are set up by non-UK nationals. And I am very much of the view we should be open to talent from around the world. I think that's great. I think it's what makes Britain great, is the fact that we are such a country that's open to talent. However, I do also want to see us opening up these opportunities to people who go to school in Britain, are brought up in Britain. Why is it that those individuals aren't setting up companies? Do they not know about them? What's the, and I'm really interested from views from others on the panel about why that is, because there are these great opportunities out there. We have a fantastic new generation coming through. I want those people to have access to those opportunities and think about setting their own business. And can we develop more of that culture? How do we get that message across? How do we get those people networked? On the subject of the EU exit, I think what everyone on the panel today is saying that the UK has a fantastic platform that's actually a global platform, and that we want people to have global ambition. Of course, we want to get the best possible free trade deal with the EU, but we also want to get the best possible trade deal elsewhere. And Britain is at its best when it's a country that is open to the globe, and I think that's where our focus should be. The public sector, very much agree, and I think on on this issue of sort of government grants and loans and GovTech funds, etc., etc., what I want to get more to the point of is saying, what money are we already spending in the public sector? How can we do that better? How can we open that up and make it more contestable for those exciting innovators? And where are the biggest opportunities to be able to do that? Rather than what we've got a bit of a habit of is creating new funds and grants, which then do interesting things, but they don't really deal with that sort of bulk of potential back office activity, for example, that could be done much more efficiently. Because what I want is I want everybody working in the public sector to have the maximum possible impact on the front line. So we're being able to treat more patients or get school standards up. So I think we do have to create better mechanisms for new ideas to get into the public sector and see that sort of disruptive innovation.
So just to follow up actually on that public sector point, I would say it's quite easy to get a pilot in the NHS, and I've heard people say that there are more pilots in the NHS than at Heathrow.
I was about to say they love those.
And it's true. But the hard thing is really getting, for example, the bulk of all of those administrative tasks, allowing a startup to challenge the system. And also I think this term startup sounds like all this sort of fledgling, I don't want to take a risk with this organisation, but actually, we're a technology company. We've been going for 5 years. We're actually a trusted provider to many, but I think this term startup filled people with dread. So I think there's like a little bit of a culture thing around the concept of what a startup is. People call Google a startup, but it's a technology company. So I think that with regards to culture, I think we just have to have a mindset shift, and I think the public sector is definitely the last to catch up with that mindset, because people used to think, I'm never going to order my food online, or I'm never going to order my clothes online. Now, obviously, it's the first thing that people do. So I would say that. And then in terms of the EU, I'm not going to bring up any opinions of what I think about that, but I wouldn't say that is the answer to this whole customer issue, because actually there are so many complexities with internationalizing, and internationalizing from the UK to a country that doesn't speak English is very difficult and complex. So yes, we might be adding extra technical barriers, but I wouldn't say that being in the EU is going to suddenly, send every startup into the stratosphere and it's so easy to transact across borders. So yeah, that's...
Francis?
Yeah, I'm very encouraged actually by the conversation that we're having in relation to culture and how we're actually defining it. And I think two words that keep coming into my mind as we now just expand on what we mean by culture and all of the excitement that I believe can underpin that. And again, ambition is part of it, but I think confidence and education are critically important to that. I think we have to build within the scenario the education processes that enable businesses which have the ambition, perhaps they don't know quite how to develop and grow, but they have to have the confidence that there is the resources out there to support them. Not just the resources in terms of funding or skills or access to skills, but the opportunity actually to go to people who have the support mechanisms in place to help them. And that can be at every level. It can be a government to support through a very well-defined and open industrial strategies to support that, but also, again, peer-to-peer learning at every level within organisations. So those businesses, I was very taken by your comment, that you're only 5 years old, and yet you're perhaps still suffering as from the perception that you're a startup. Yet you have already become embedded. So already there's an education piece that you can bring to helping those organisations that are 1 or 2, 3 years behind you. And likewise, I think at every level in business there is that potential in terms of the education process. And I think we need to make much more emphasis on that in terms of conveying to business the opportunities that are there. Whilst we've heard of a lot of the success stories, and it's great to hear them, the AIM listed, the full market listing and all of those businesses, we still, and I go back to my earlier point, that the UK is made up of a very large number of small to medium-sized businesses that employ perhaps under 50 people, but who are the bedrock of the economy. So therefore we have to also put in place the resources and support and the commitment and the education to enable those businesses actually to reach, if not to the cataclysmic levels that some businesses can reach, actually support their own businesses, support the economy and support the communities from which they come.
Chris?
To me, culture, I think, has changed beyond belief. So 10 years ago, we didn't see the entrepreneurs that we backed wanted to go international. Now they do. In our current portfolio of early-stage businesses, 50% have gone into the US market within 2 or 3 years. This is just a mindset change. They just feel like they have an opportunity to do that much more quickly. And I think technology is right at the heart of that. Many of the things that we back are a little bit like Melissa talked about. They are using technology to deliver a service or a product or whatever in a much more dynamic way, and that allows you to scale a business very quickly. We've sold businesses from our portfolio to Google, Twitter, Amazon and Microsoft over the past few years, and I think that would be a really bad thing if what immediately happened was all the know-how and jobs and everything went straight across the West Coast. That hasn't happened. What has happened is those sales have then catalysed Cambridge or London or wherever to become a research hub for those US organisations, and you've actually seen jobs expand. A few years ago, we sold a business to Amazon, and at the time I thought, why are they doing that? It was a voice recognition business. That algorithm has gone on to become the heart of all the Alexa Amazon product, and they've got a big team in Cambridge working on continuing developing that. So that is a good thing for the UK. When we sell a business, and we sold a business to Twitter 14 months after it was created, that would have happened even if that business was in the West Coast. It would have still been sold very quickly to one of the US tech giants. But the really strong thing is all of the proceeds from that sale are then recycled by our fund into doing new deals. The entrepreneur usually becomes an angel or goes on to set up another business. So there is that ecosystem benefits from that transition. And I think in terms of skills, it's partially about strength of depth. The reason people come to the UK is because they feel they can build a business here and they can get access to the range of what they need. But I think we should be doing more to try and encourage kids in the UK to learn coding and digital skills and so on. I think that's absolutely fundamental. We did a programme this summer taking 100 kids from deprived parts of London into our office in groups for a couple of weeks at a time. And while they may have never had the likelihood of going on to really strong kind of conventional academic success in the way that we might know it, what was very clear is they had very strong digital skills that will equip them for a role in future. And we think some of them will come back and intern in our tech team next year because they actually have that ability. They probably didn't know it, but give them an opportunity can help to change minds. But there is no doubt that we are very London-centric. I'm an investor myself in a business based in Stevenage that has just moved from 30 minutes outside London into London because they didn't think they could build the business properly in Stevenage. And I don't think that's a reflection on Stevenage. I think that's just more of general reflection on the UK more broadly, that depth of talent tends to be relatively narrow in its geographic location.
Now, I think we're coming up against the clock, and I think, thank you very much, Francis, thank you very much indeed. I'm very conscious that we have a challenge from the London Stock Exchange about the nature of debt versus equity and what in the past was called the thin capitalisation story. And before we sort of finish off, we should do that justice. So, a quick round of questions. Gentleman at the back with the beard right there, who I know is very keen. Gentleman on the other side of the back, and then the gentleman sitting closest to me with his hand there.
Thank you very much. My name is Tim Barnes. I actually run two of the government-backed schemes that support these things, one scale-up program, one startup program, and I run the world's first incubator focused on GovTech companies, which we started here a year ago. This is stuff that happens. A lot of very positive comments from the panel, and I agree with most of it. But the challenge is Xavier's figure of 8 billion of funding across the whole of Europe, great. Nearly half of that's in the UK. 53 billion in the US in VC funding. But 40% of our VC funds are cornerstoned by the European Investment Bank, and it's already gone. We've seen a decline of new money, a decline of startup applications, and we're already killing what we've just said was a brilliant scheme. Will the government give an undertaking to replace the EIB money in full and give that guarantee immediately so people can invest money with confidence?
Thank you.
Yes, hello. Neil MacArthur. We've grown a very, very large business, some startup in Manchester. And we also run the Tech Trust in Manchester, which supports enterprise. For information, there's 4,000 students between the two universities in Manchester. Two things I think the government could do to really promote this thing. One is risk, and I think Melissa's point, everybody avoids trading with the public sector. It's hard work. We could actually try and take risk in the country down at all levels. the country's become really risk averse in everything it does, whether it's walking down the footpath, you know, or anything you do in life. And the facts of the matter are, if you take risk down to zero, you achieve virtually nothing. So we've got to remove risk. And the second thing we could do is capital recycling. At the moment, if you've got locked-in capital, and bear in mind, under 2 million funding in the UK comes entirely from angel investment. If you've got locked-in capital in a business, you can't roll it over into new businesses without paying CGT on it. So you have a 20% tax on reinvestment level. We should actually address that issue.
And the gentleman from
Yeah, I've got one of those and finally questions, really. We've got Apple and Google. They do have a shelf life. You know, they'll be replaced by the next big thing. Nobody talks about MySpace anymore. I'm old fogey enough to remember when Friends Reunited was a cool idea. So do you think that the next Google or Apple, which could be British, do you think that exists now as an SME? And do you think that could be the next global idea?
Very good. No, I think we will start with Ms.
I absolutely think that the next Apple or Google could come from the UK. I don't see why not. We really do have the right ingredients, and it's just about incubating the companies in the UK environment first, so that then when they're ready to internationalise, that they can do that at strength.
Why not? If you think about how do you create the next Wimbledon champion, you don't just try and rifle shot one kid and say they're going to be our hope. You need to create tens of thousands of kids playing the sport. And if we do that with enough early stage businesses, maybe one of them will pop up to be the next Google or Amazon or whatever. The question about the EIF is an absolutely real one. We see ourselves and everyone else in our world. EIF has already stopped talking to UK funds. In fact, even 6 months ago, they wouldn't talk to us anymore because they said it just wasn't going to be worth their while. And that is a real funding gap in terms of cornerstoning UK VCs. As I said earlier, massive deficit of UK domiciled funds. Our institutional money in funds that we run is all from Switzerland, Germany and the US. I think that's a shame that UK pension funds don't play a bigger part in doing that. And I think in terms of how to help businesses free up capital, there are things like entrepreneurs relief that can allow people to recycle capital out of businesses, which I think is a help in stimulating entrepreneurs to back next businesses.
Yes, ma'am.
Well, two comments I'd make. I'd reiterate what I said earlier in my opening comments. They are there, those next Apples and Google. We just haven't heard of them yet, or we don't know what the name will be. I think fintech, for example, is an area where the UK has a significant global opportunity, because we both have certainly the world's most global financial markets, which, by the way, only about a third is supported out of London. 2/3 of financial services jobs that support, the city and other financial services are based outside the Greater London area. But we have a global leading, in some areas, by far the largest financial market. But we also have the innovation, the technology. And if you look at the United States, the technology is on the West Coast, the finance on the East Coast. It's a little bit over 3,000 miles, but that is actually an impediment. We have a global advantage, a global competitive advantage, if we're going to be thinking of 100, 200, 300 billion pound companies, that we have it all in the same area. So it's really important that where we have competitive advantages, which, by the way, are irrigated and supported by the rest of the country, we give them a fair crack at remaining globally competitive. So that's an area where I think one of the sectors where we could have 100, 200, 300 billion companies. And as the banks change their business model, if you look today at the traditional banking industry, where you look at foreign exchange trading, payments, in the last 5 to 6 years, about half of those traditional markets have been lost by the banks. They've moved on to electronic payment systems, basically the fintech industry. And we have the advantage that besides the legacy, we actually have the disruptive, innovative entrepreneurs built right here. So I would be certainly prepared to say that over the next, let's say, decade, just to be a bit conservative, not to put too much pressure on the very fine world-leading companies that have listed on our exchange in the last 2-3 years, cybersecurities, look at the Sophoses of the world and many others. I would say that this is an area where you are going to see Apple type, but those names will be forgotten. They'll say, Apple, what was that in 10 years' time? But we'll have one of them. And I think the second sector in my opinion, which actually accounts for globally about 50% of value creation in the last 25 years in terms of new businesses, is life sciences. So you can think of it in biotech, you can think of it in healthcare, it could be perhaps our friend here growing a global company. So you can look at all the English-speaking countries in the world. Let's start with the Commonwealth. Why not America, Canada, and many others? They have also, some issues in terms of efficiencies. But the bulk of value creation in the stock market, about half of it in the last 25 years, has come out of that sector. And then if you look here at Manchester, Cambridge, Oxford, many other universities, we have the science. We also have now a growing pool of investors. So if I had to make a bet, 2 bets, fintech, life sciences. I'm sure I've missed half a dozen others.
I'm going to ask Liz to comment generally on those questions, and then we'll get the panel to wind up on the real sort of exam challenge of the afternoon on theme capitalisation. So if you answer the questions, then we'll turn to the difficult stuff.
Okay, so, in terms of global and Apple, I think our companies should absolutely be ambitious and globally ambitious, but I worry about sort of targeting a particular type of business model, because what we know about what's happened over the past 20 years is, where the value has completely changed. It used to be the mobile phone companies, then it's the tech companies. We don't know what the next thing is, so I just think we have to be wary of trying to replicate others' success. I think we need to think about what's the next big thing, and the future is unpredictable, and that's what's exciting about it. I mean, on the subject of funding and the European Investment Bank, that is part of the overall discussions about the EU and funding sources that were previously from the EU and what we do about that. I very much support the idea of how do we get institutional funds to invest in these areas, and also invest in areas like UK infrastructure. I do think it's interesting that we've got the Canadian Teachers Pension Fund investing in our infrastructure, and I would like to see more activity by UK institutional investors in that area. And back to this point about sectors, life sciences obviously very important, fintech important, but we've also got all of the traditional businesses in the UK, but that technology can have a massive impact on the way those businesses are delivered. So I think we should be careful not to leave, for example, food businesses, where actually used to be responsible for DEFRA, I think huge opportunities in that space as well, and we don't know where those are going to emerge from.
Well, we're coming very much to the end of our time, but there is a latent question thrown out by Xavier, which actually emerged from the previous event, the Policy Exchange of the Labour Party Conference, which is this issue of thin capitalisation. When you have an income tax system, savings income is subject to double taxation. When you have a corporation tax regime, that double taxation is aggravated. Now, you can do things to mitigate it. Mr. Callaghan, when he introduced the system, did it, and both Labour and Conservative governments got rid of it. There is this big challenge of, do we actually tax equity too much and give too much privilege to debt? Now, we're in the 1 minute sort of slot time now. We'll work through the panel, and we'll have Liz at the very end. Any thoughts? You may not have any. Maybe you do.
Well, so we've only taken equity finance. So we took 10 million in equity finance. We recently got offered another $1 million from Barclays in venture debt, and we turned it down. And the reason for that is because and what we were talking about earlier regarding the risk appetite that it creates for you, actually had covenants on it that said basically if we were going to deviate 10% away from our plan, which everybody does, then we had to pay the money back in full. And so actually...
so you want equity?
So I would love to have debt because I don't want to get diluted, but the covenants that it comes with are just too restrictive for a startup.
Chris?
So the reality of most of the businesses we back is equity is the right option. They should be equity funded. And I think we need to make sure we create the right culture for that. So I would encourage actually Liz to focus more on maintaining the stability of the mechanisms we have, things like EIS, VCT, business profit relief. These kind of mechanisms help high-grade businesses and family businesses plan for the future with confidence. I know Xavier and others have views about the debt equity structure. Private equity cares a lot about that. To us, though, it's mostly about equity.
Exactly. The very quick guidance.
Well, no guidance. I could just give you a few numbers. Last year, the treasuries of Europe spent 570 billion euros subsidizing debt. That's the cost to taxpayers. whereas each sterling or euro or other currencies in Europe of equity income was taxed 4 times through its life cycle, which means that on average, pre-returns, but post-tax, if you work the tax backwards basically to the point of the starting point, an equity investment has a fiscal cost which is 40% higher. But these are average statistics than a debt investment. And so if you want to develop an upward focus, ambition, upside focus culture where people don't think there's a limit, because by definition, an equity investment has no limit to the upside, whereas of course debt is focused on guarantees, protections. If you want entrepreneurs to be thinking of unlimited potential growth, you need, we believe, a capital structure and a fiscal structure that actually recalibrates, diminishes some of that handicap, and then people will be focused less on debt. And I'm very pleased to hear what you said about covenants. Debt, capped returns, you need protections. You're going to be thinking downside. And that's part of the culture where I think Europe and the UK leads. There's absolutely no doubt. But I think more could be done on the fiscal side to help entrepreneurs focus on equity capital.
Chief Secretary, you may be saved by the bell.
I'm very sorry to disappoint you, Warwick, but I'm not about to announce a new tax policy in this policy exchange meeting. Although I'm sure many would like that. Although I'm interested in your mention of Mr. Callahan. It seems that
it was a very, because he was very interesting because he had been an inland revenue officer, and he's the only chancellor I think who'd actually worked in one of the revenue departments. So, first of all, can I thank all the panelists for coming and bring an interesting and worthwhile subject, which can be a little bit complex, alive and vivid and interesting. Thank you all very, very much indeed. Liz, thank you very much for coming to help us again. Can I thank the London Stock Exchange, who's actually worked with us on this, and it's something we're very interested in actually helping us to make this a reality today, and also at the Labour Party conference last week. And I really want to gratefully thank you all coming. You can't do these events unless you've got the questions, and you've got an audience that's prepared to be game to participate and come along. So thank you very much indeed as well. Thank you very much.